Hi, I am Vinco David, the Secretary General of the Berne Union. The Berne Union is the International Association of Credit and Investment Insurers, and we have 86 members spread across 70 countries. Well, when it comes to appetite, you see a gradual growth over the last few years. It's not a massive growth, but a growth matching the growth in world trade. So credit insurers, member of the Berne Union, insure export credit and trade finance, anything that crosses a border. There has been a sound growth. Actually, currently, members of the Berne Union insure annually an amount of $2.5 trillion per year in new business, and that represents about 13% of all world trade. Well, there are a few developments in the world that credit insurers really look at. One is the increased tension between some trading partners, trade conflicts, some call it trade wars. Maybe we're not yet at the stage of a war, but there are certainly trade conflicts impacting on trade. What we see is that global supply chains are moving away from China, for instance, to avoid tariffs in the US. Another development in the UK is Brexit, and we've already seen a slowdown in investment in the UK and an increase in claims in the UK. Whether there is a direct link with the prospect of Brexit is not sure, but we've seen that the economic growth in the UK has petered out, really. Other developments that credit insurers look at closely are the developments in the Gulf area, tension between Gulf countries, and the impact that may have on supply of oil and gas, for instance. Northern Africa is still unstable here and there, other parts of Africa as well, and that may have an impact on claims. But when you look at appetite, there is still abundant liquidity among credit insurers. The only question is whether there is sufficient liquidity for a particular type of business you want to be insured. But overall, there is abundant liquidity both with private insurers and with export credit agencies, ECAs, the public insurers. Yeah, when we talk capacity, we can distinguish between private insurers and ECAs, export credit agencies, the public insurers. Looking at the private market, there is abundant capacity. And that capacity is caused in part by low interest rates. Institutional investors look for alternative investments with higher margins than, say, state bonds. And one of these areas is insurance, and including credit insurance, still providing quite nice margins. If you look at the loss ratios in the industry among private insurers, they are between 20, 30, 35%, which is quite benign. With the economic times are still quite benign, and the combination of good margins in the credit insurance industry and low interest rates causes abundant capacity. There are now about 60 private market players in the industry. When you look at ECAs usually have had a lot of market capacity anyway, because that's in their mandate to support national industry, national exports. So at the moment there is abundant capacity, maybe not in every line of business. And I want to mention one line of business where capacity may not be sufficient, that is SME exports. Banks are sometimes a bit hesitant to finance SME exports because the margins may be nice, but it's small transactions that require still quite a bit of overhead, say in the area of know your customer's customer, etc. So that type of business may not always be profitable for either banks or private insurers. And what you see here is that ECAs have stepped in to do more for SMEs.
Have they?
Yes, they have, really. Some ECAs have, for instance, developed financing products for SMEs where previously they were only insuring risks. So there is certainly some more attention by ECAs to serve the SMEs. The biggest problem is not the willingness of ECAs to serve SMEs, but SMEs do not always know where to find insurance or finance for their exports. So it's more of a market development issue than willingness from the ECA side.